Hi everyone, what's up? This is Yanni from Stocks University. In today's video I want to review Gilead Sciences. The stock symbol is GILD. It's an interesting stock. It's, as you can see on the weekly chart, it went down since 2015, actually for the last couple of years. It went down almost 50% to as low as $64, $63. And now it's been showing signs of potential reversal, so it's an interesting stock to review, and I recommend checking it out in the next couple of days and weeks. Personally, I'm not invested in the stock yet, but I'm definitely considering it, given the recent signs of potential reversal. So let's go to the candle chart. We're on the weekly chart, and let me first draw a demand zone here, just to show you how this demand zone, which is more than 3 years old, since April 2014, has been holding the stock. The stock has been compressing into the zone in the last few weeks, and last week it actually made a very nice price action, a big bullish candle showing with a nice volume here. So there's been a lot of interest from buyers to buy into the stock, into the demand zone here. And this week is it's just about to end. It's Friday afternoon here, and I think that it's worth checking the stock on the weekly and daily, specifically the daily candles in the next few days and weeks, and I'll show you why. By the way, the month is about to end as well. June is about to end, and if it closes more or less around this area, then it's definitely interesting, because we have another price action here, which is a monthly bullish engulfing candle from within this demand zone. So it's definitely worth following this stock. On the daily chart, I think it's worth waiting. Again, it's obviously not something I can predict 100%, but it's worth waiting for this stock around the area of 66 to 67. Okay, I drew this line, but I can also draw just a simple resistance or support line. It depends where you're looking at. It was support around here, resistance around here, and potentially if the price goes down, it can find support again around these lines, or this line, in the zone of 66 to 67, and then if it goes down to this area, it gives us a good risk-reward ratio. So the risk, if you enter around this area with a confirmation candle, whether it be a doji or a hammer or whatever, or a bullish engulfing candle, the risk is somewhere around, let's say if we enter around 67 and set our stop loss or exit point around 62, 60 to 63, we have a risk of around 6 to 10%, okay? Somewhere between $4 and $10. Whereas the reward, the potential reward, let's go to the weekly chart for a sec. We can see some resistance lines around here. So yeah, somewhere between, well, I would say, instead of putting a line, I would set a zone somewhere around here. Okay, so it's somewhere between somewhere between 79 and 82, 83. So we have a potential reward if we enter around 67. We have a potential reward of somewhere between $12 and $15. So basically, for a risk of 6 to 10%, we're getting a reward of somewhere between 16 or 17 and 22%, which is great. And all it requires from you is just to follow this stock and wait for it to come down to this zone. Obviously, if it doesn't come down and you decide to enter around this price of 70, then your potential risk is higher, because again, if you set the stop just below the demand zone, you're talking about a risk of around somewhere between, let's say about 10% if you set the stop around 63. And the reward is not very high as well. We're talking about a reward of somewhere between 11 and 12, 13, 14%. So the risk-reward ratio is not very good. We'll keep tracking it here in Stocks University. By the way, fundamentally, the stock Gilead Sciences has around a P ratio of somewhere between 7 and 8. So it's quite low. It's also worth checking it fundamentally, and we'll discuss it probably in the next video as well. So see you in the next video. We'll keep you updated on Gilead Sciences. Thanks for watching. Bye bye.